Hello and welcome everyone. In today's video, we will be discussing about working capital management and operating cycle approach. Working capital management is a critical functional area in the study of financial management. We know that the portion of capital invested in current assets, that is raw materials, work in progress, finished stock, debtors, etc., is called the working capital. Hence, working capital is the investment of funds of a company in its short term assets. Each and every organization has to invest in working capital in one form or the other. Working capital can also be defined as the excess of investment in current assets over current liabilities. So, components of working capital are basically the current assets, current liabilities, and we have different terms like gross working capital concept, net working capital concept. So, when we are talking about the investment in current assets, we are talking about the gross working capital concept where current liabilities are not deducted from current assets. But when we talk about net working capital concept, it refers to the excess of current assets over current liabilities. Hence, it's the difference between current assets and current liabilities. Okay. So, the need for working capital can be assessed by operating cycle approach. So, operating cycle is one of the very important concept in case of working capital management. So, now what is operating cycle? So, operating cycle process consists of duration of time between company's investment in raw material, spending on wages and other experiences, and realization of cash from sales of goods. So, when we are talking about the time that is taking between the company's investment in raw materials, spending on wages and other expenses, and realization of cash from sale of goods, it is called operating cycle. So, operating cycle, in case of a manufacturing firm, say, will be involving certain steps like conversion of cash into raw materials, conversion of raw materials into work in progress, conversion of work in progress into finished goods, conversion of finished goods into debtors. And the last step will be conversion of debtors into cash. So this cycle is repeated again and again, and hence a continuous requirement of working capital is there. In case of a trading concern, the operating cycle will include the steps such as cash, conversion of cash into inventories, then inventories into debtors, and debtors into cash. In case of service concerns, the operating cycle includes the length of time taken for conversion of cash into debtors and debtors to cash again. So, your operating cycle, the steps in your operating cycle will differ from the concern you are talking about. So, if you are concerned with the manufacturing firms or a trading firm or a service firm, you will be having a different operating cycle. Now, operating cycle period can be defined as the length of time duration of the operating cycle of a firm. It is very important to calculate. So, if we say there is a shorter period, operating cycle period, it means we require less working capital investment and vice versa. And your duration of the operating cycle period can be dependent upon various factors like nature of the industry, purchase policy, inventory policy, production planning and control, maintenance and upkeep of plants and machinery, use of outdated or modern machinery, change in technology, efficiency level of workers and their morale, credit policy and debtors collection management, ability to get credit from suppliers. So, operating cycle can be ascertained with the help of the following formula. That is, operating cycle is equal to R plus W plus F plus D plus minus C. Okay, now what are these? So this is our formula. Okay, so R plus W plus F plus D minus C. Now here O or OC is operating cycle. Operating cycle. R is raw material holding period. W is work in progress period, right? F is finished goods holding period. D is receivables, इसको हम debtors भी रेफर करते हैं. D is receivables collection period. And C is credit payment period. So the above periods can be calculated with a number of formula, and that too in days. So when I talk about the raw material holding period, right here, this one, raw material holding period can be calculated as, there are two formulas. So here I will be discussing the formulas. That is, it can be calculated as average, okay, raw material stock held, average raw material stock held divided by annual consumption of raw material divided by 365. So here is the division symbol. You can write this formula also as the average raw material stock held divided by annual consumption of raw materials into 365. This will give you the same answer. Also, this formula can be written as average raw material stock held divided by average consumption of raw material per day. You can calculate it that way also. If only if you are having the information regarding the average consumption of raw material per day. Otherwise, you will be dividing annual consumption with 365 days, right? Similarly, we have the work in progress period. So this can be calculated as, so here our formula will be average work in progress stock held divided by annual cost of production of goods. COP is cost of production of goods divided by 365, or we can say average work in progress stock held divided by annual cost of production of goods into 365. So this is how we calculate this one. So this is the formula. right? And if you have the average cost of production of goods per day, you can divide average WIP stock held with that particular information, only if you have that information in the question. Similarly, for finished goods holding period, our formula will be average finished goods stock held, right, divided by annual cost of goods sold divided by 365. And if you are having average cost of goods sold per day, आप उससे भी divide कर सकते हो. So this is the formula. Similarly, in order to calculate receivables collection period, that is our D here, the formula will be average accounts receivables, right, divided by annual credit sales divided by 365. So here we are dividing it by the annual credit sales. And if the question gives you average credit sales per day, you can divide average accounts receivable by that also in order to get your answer of the number of days that involves the receivables collection period. Last, we are left with the credit payment period. In order to calculate this, again, we have the formula. So let's find it out. So credit payment period is basically average trade creditors. Trade creditors or our accounts payable, right? Divided by annual credit purchases. Credit purchases divided by 365. So here you need to merge the cells in order to divide it. So divided by this. So average trade creditors divided by annual credit purchases divided by 365 gives you credit payment period. Okay. So raw material period plus work in progress holding period plus finished goods holding period plus receivables collection period gives you the gross operating cycle. So the formula till here, that is R plus W plus F plus D, this formula till here gives you the gross operating cycle. And when you subtract creditor's payment period or credit payment period from this, you will get the net operating cycle, which is also known as cash cycle. So the formula till here, that is the raw material holding period plus work in progress holding period plus finished goods holding period plus the receivables collection period will give you the gross operating cycle. And if you subtract creditors payment period from it, you will get the net operating cycle, which is also known as cash cycle. In the next video, we will be discussing a question on this concept. So I hope you understood the concept. Thank you so much for watching. Bye-bye.